All right, so let's get into how these insurance companies determine the rates and what that all consists of. So I'm Hunter with Nelson Insurance. Let's get into it. All right, so here we go. We've got rating factors on what goes into insurance. Now, I've got kind of a long list here. Really, not all this is going to be for every single insurance company. If you got somebody like Progressive versus AmTrust or Canal, it's going to be way way different, right? So they're not going to be exactly the same things, but we'll kind of show you here all the factors, and then from here you can kind of decide on, oh, this side of my business is not so pretty. Let's go find an insurance company who doesn't rate off of this, or this side of my business is really pretty, so who's going to really rate off of this? So it could really help you determine the best insurance company, all this sort of stuff. Whereas that might be why some of these insurance companies are probably double, triple of the quotes you're getting because they're really rating off of different stuff. So let's start with like Progressive here, right? So I'm gonna get a blue marker and I'll just kind of show you guys what Progressive, the main one, biggest, largest insurance company by a long shot, is really be rating off. So I just got blue. I'm gonna put a blue dash by it. So credit score, massive, 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 massive for Progressive. There are insurance companies out there who don't even rate off your credit score, but if you have good credit, you're going to be dirt cheap with Progressive. I've got a guy who's with Progressive paying $5,700 a year, pays in full, and I go quote him with some of the big guys who are usually going to beat them, usually going to beat Progressive if they, qualify for these other insurance companies. So like I went and quoted IAT, Northland, Canal, Berkeley, on and on and on, and nobody was even touched Progressive. Not Geico, not nothing. I mean, it was like $3,000-$4,000 in difference from the next cheapest quote to Progressive because this guy's credit was phenomenal. So Progressive rates heavily off that. Everybody is going to rate off the value of your truck like crazy. I mean, it really just matters. If you get $10,000 truck versus $150,000 one, it's going to be a huge difference. Age of the truck, Progressive probably doesn't care about that actually all that much. It might be a little bit of a factor, but I'm not even going to mark it because it's probably so small. ELD and dash cam, they do kind of because they give a discount if you have a Motive ELD and dash cam. Or even another dash cam, you get a 5% discount all the way up to a 30% discount for having Motive ELD and dash cam. You're the miles. See, like this big thing right here. I've got a guy who's got 4 drivers in one truck hammering miles on this thing. And it's with Geico. They don't ask miles, or sometimes they do. Not typically though. Depends on the class code. But yeah. So I'm kind of blanking out if they do, but like Progressive could really care less. Some of these guys could really care less. Some of them want your IFTAs to go see where you're driving and how much you're driving. Years of CDL definitely does matter. They don't ask you, but they're going to pull it. MVR is massive, massive, massive with Progressive. They're not going to rate off your loss runs really at all because they don't even ask for your loss runs. So with like Progressive, I'm not giving you guys a loophole here by any means. I'm not saying go take advantage of this thing. But if you got a driver who turns in 5 claims, bunch of different stuff, and you fire them, you get the squeaky clean new driver on there with a perfect MVR, Progressive's really not going to rate off of most of that stuff. So I mean, yeah, it's kind of crazy. It's kind of crazy what they do. But MVR credits pretty big there. Turnover, data hire, not so much there. Cargo type, 100%. Years of business, 100%. Radius is huge with Progressive. Cab scores, definitely. Lost ones, like we said, they don't even look at those or even ask for them. Where you're hauling to, doesn't matter. Location, huge. Growth, not really. So as you can see here, like maybe half the stuff Progressive even rates off of, okay? So I'll get back into everything here now, but I'm just wanting to give you guys an example that not even all this stuff is going to be rated off of when it comes to some of the big insurance companies, okay? So let's just get into it now. Owner, we have credit score. Credit score is going to be a play with probably 80% of your insurance companies. Our largest insurance company doesn't even write off credit score. They don't pull it. they look at your payment history on the FMCSA. So every time that you guys have a non-payment, your filing gets canceled, reactivated. We're not your authority. I just want to make sure this is emphasized. Not your authority, but the filing showing up on your FMCSA or your SAFE or your CAB, whatever. So if you go through the policy period, and I can see that 5 filings were reposted throughout your policy period, you non-paid 5 times throughout that point, or name changed or something, and that's where my big insurance company 10-4 is going to look at it at. So they're going to look at what insurance company you're currently with, but then you go to Progressive, Geico, all that stuff. Your credit score is going to be massive. We had somebody who had a bankruptcy. Everybody was stupid expensive. Progressive was $50K one truck. Geico's $40K. Went to a program who didn't pull an MV or who didn't pull a credit report or a soft pull, not a credit report, but like a soft pull on your credit. And sure enough, they were, way less than half the price. Management safety, this is going to be really big if you are in the fleet space. They want to know what your safety protocols look like. Do you have management experience if you haven't been in business for a whole long time, or you're growing really quick, or anything along those lines. They want to see your safety scores. Like, so what does that stuff really come into play? So I've got CAP scores on here, but they want to know about that story behind things. What are you doing with stuff, okay? Equipment. Equipment makes a huge difference. Most insurance companies have a rate. Well, every insurance company has a set rate for that truck, or they're going to give you a rate for the truck. And the reason I say that, and not everybody does, is because there's differences here. So I'm going to kind of write over here. So let's say you got a $100,000 truck, and excuse poor handwriting here, times, I'd say an average rate. I mean, it really could depend. I've got guys who are 0.5% because we've been in business for a while, and they're really good. If you're a new venture, you might be close to that 6 or 5% something. We'll go 5% for easy math here, which is not real uncommon. 5%, you are going to be 5K. Whoops, not 500K, 5K. So yeah, hopefully that kind of makes sense there. So 5%, 100K, and that's just basically what they're doing there. So, you know, the longer you've been in business, the more trucks you got, the more TIV, total insured value. You got a big fleet. They're gonna look at that total insured value instead of that one truck. But I mean, obviously here, you know, if Canal, for example, is 5% rate. Okay, 5% of 100 grand is $5,000. You go in there and insure a $20,000 truck, now it's gonna be $1,000. So the value obviously makes a difference. The age makes a difference. If you have a truck that's too old for ELDs, some insurance companies won't take you. You actually very well could be limited to like Progressive, Geico, Great West, stuff like that. It could hurt you, you know. So having newer trucks is a lot better. They know they got the safety features and all that stuff. ELDs or dash cams, a lot more of insurance companies starting to rate your ELD data. Whether you guys like it or not, nobody really likes it that much. But more insurance companies are just going to get to that point. And if they're not requiring it, they're going to offer a big discount for it. And you're going to be paying a lot more if you don't connect your ELD data. Some of these insurance companies, like 10-4, one of our biggest guys, they connect ELD just to make sure you got all the trucks insured. They don't care what you'd really do. They know hard stops is just a way of you preventing an accident. You know, you got to do a hard stopper once in a while to make sure you're not smoking somebody. They're not going to ding you for that. You know, sometimes you got to speed up a little bit to get out of the way danger. I mean, it's just how it goes. They understand you guys aren't perfect, or the ELD data on there is not going to be perfect because you guys are maneuvering around the road trying not to cause an accident. So they don't even look at that. They just make sure all the trucks are on there. Now, some companies like CoverWheel are going to monitor that data throughout the year, and you might get a 30% discount, you might get an increase. So then, yeah, I mean, they're going to take some of that into play. If you go over 10 miles an hour, yeah, they're going to ding you. They're going to kind of count that against your discount there. Dash cam the same way. Like 10-4, they offer 5% discount. You get a dash cam, great, 5% discount. If you don't have one and you want to get one through Nexar, their partner, sure, it's 5% discount. So they'll do that stuff. Progressive's discount for dash cam is unreal. I mean, you go in there, you get, gosh, it's like an extra like 20 or 25%. I can't remember right now, but it's another, maybe it's 10, maybe it's just 10 extra. But whatever it is, it's double digits. It's a big discount on you guys' insurance for just having a Motive dash cam. So a lot of insurance companies kind of get that way, especially Nirvana, HDVI. Nirvana, I'm kind of stepping back here, or stepping away from the main point. Nirvana is taking over fleets like crazy right now. They've only been out for about 4 years. They have 520 fleets insured, which may not seem like a whole lot, but it is. It is quite a bit of fleets for not being out real long. You got to have a compatible ELD or ELD dash cam, whatever they connect. And I mean, I've seen them. Last month they just closed a 130 unit, and they were $10,000 a truck on it. I heard a story where Great West was 600,000 on a fleet, and they came in at 380,000. I mean, it's just like nuts. They're taking over fleets like crazy. Non-fleet's not as big, but they're still definitely doing well there. And 10-4, I mean, they're fantastic. You got more than one truck, they're required to connect it. If you guys don't connect, you guys are missing out big time. It is some big time savings. Yearly mileage. Now, if you were not quoting a Progressive, Geico, some of these direct guys, yeah, they want to know your yearly mileage. You know, like Berkeley requires that you drive under 125,000 miles a year. National Interstate, fantastic company. Same with Berkeley. They require you're under roughly about 110 or something along those lines where you're not cranking out miles like crazy. So they want you to be lower miles. Drivers is probably one of the biggest things. Years of CDL is huge. If you don't have drivers over 2 years of CDL, now some companies let you get away with like 1 of 10 or 1 of 6 drivers being just under 2 years. But if you got 50%, for example, under 2 years CDL, or most of them, whatever, okay? You're looking at Progressive, no requirement. Geico, no requirement. BHHC, 6 months requirement. AmTrust is 1 year requirement. And after that, you're going to go with some no-name RRGs, risk retention groups that, yeah, I'd be a little nervous about, you know. I've never heard of their claims experience, like Alpine, MTM, all that type of stuff. You know, there's just a couple RRGs out there that require lower years of CDL experience. I'd just be careful at stuff. They're not AM Best rated. You know, they're not. You know, it just depends on what their financials look like. So, you know, just be careful if you're going to get into that space. If yeah, I mean, it's just kind of tough. Or you get into a captive and you basically can make some of the rules there. MVRs, I mean, it's obvious. Your motor vehicle report. You get a driver with 10 accidents. Yeah, good luck insuring them. You had 2 at-fault accidents. Good luck paying something reasonable. You know. So, depends on the insurance company, but you can fire that guy. And, you know, it might not even show up in your report, and Great West or Progressive and Geico will take you, no problem. You get lost runs, they're still going to show up in the lost runs in like a couple of years. You say you fired them, though, a little story, and hey, what you going to do next time? You know, you'll probably get somewhat around it, right? Turnover and data hire, big deal. Depends on the insurance company, though. Again, like most insurance companies actually don't really care. IET, who's been really competitive lately, we just had a 3-truck guy, 31,000 for the year. I don't even know, 3-4 years in business, something like that. And yeah, reefer guy. So I had a reefer breakdown, all that sort of stuff on there. And sure enough, you know, data hire made a massive difference. They said it actually made like $4,000 in difference on one of the drivers being hired a couple of years ago when the company started versus just being let on right now. Cargo type, I mean, this is pretty obvious. You're hauling grain, be dirt cheap. You're hauling oversized loads, mobile homes, it's going to be a lot more expensive, you know. Years of business, again, fairly obvious deal. Most insurance companies are required to be in business 2-3 years. So, you know, when you're a new venture, your options are very limited. You get 2 years, now you get 10-4, you get Northland, you get IET, Nirvana, stuff like that. Once you get 3 years, you get Midwest Family Mutual, you get Berkeley, you get Crum and Forrester, you get AmTrust, or AmTrust will take them, but like our AmTrust program, the Amazon program, needs 3 years of business. Radius, huge deal. 50 miles versus unlimited. I mean, you could be talking shaving 30% of the price off. It's a big difference for Radius. Cab scores, just CSA scores. Don't rack up a bunch of violations. Don't rack up severe violations. Don't get alerts by having so many violations that go over a threshold and now you're alerted. Brokers see it, insurance companies see it, they hate it. So don't get that. Loss runs, claims, pretty self-explanatory. A lot of people don't understand what a loss run is. It's a document from your insurance company showing when the claim happened, how many claims you had, what the payouts were, when they happened, blah 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 blah. If you got no claims, it doesn't mean you don't have any loss runs. It just means you can have a blank sheet basically saying no claims. Companies love to see it. So if you need most insurance companies need loss runs. You may not. If you've never heard of loss runs or had to get them, you probably have not been shopped with that many insurance companies. I will recommend getting your loss runs and finding some insurance companies that will take them, because usually the guys rating off loss runs are going to be some of the best. Where you're hauling to, not many insurance companies can be rating off of this, but like Nirvana is very heavy. They don't want you in New Jersey. A lot of insurance companies don't want you in New Jersey because of the $1.5 million limit now that's required by them. So where hauling to can be a big difference. If you're going through Houston, if you're going through big cities, big states, the ELD guys hate to see it. Northland, some of those guys, they're gonna see it. Programs like if you guys don't know what a program is, it's like Clear Blue, Trisura, Obsidian. Basically, it's just like these in-house insurance companies. They can be good, but they want to see that stuff. Your state, where you're located, big deal. A lot of people, pretty much know this. Here's the big thing. A lot of guys go, I've had people asking this. I'm in Florida, I'm in New York, I'm in Texas. Can I move my business, my LLC to Iowa? No, you cannot. You can try. You might get a claim denied though. Your business state and the garaging state for the trucks basically has to be the same. Progressive, most of you guys may don't know this. Your trucks have to be garaged in the same state that your policy is at. Progressive does actually not allow it. So if they catch you guys at claims time, they're going to be doing some underwriting, and you might get a claim denied, and you don't want that happening when you just paid $200,000 over the last 3 years for insurance. So how many trucks you got? And you just got a $1 million claim denied. You just paid $200,000 for a piece of paper. So don't try to cheat the system. These loopholes, there's no such thing as a loophole in insurance. You're gonna get screwed because your buddy told you to. We are not trying, for one, don't make the premiums. I am not trying to get you hosed. Frankly, I want the lowest price for everybody because it keeps my clients longer, and that's how insurance companies make money. And so the longer I can keep a client, great, that's better. It helps me out. I can build the relationship. It's way more expensive to go bring on a new client than go try to find a new, or bring on a new one than keep an existing one. So I'm gonna give you guys the lowest price every time. So if I can do something to get lower, I'm gonna talk about it. And growth, don't go from 4 to 40 trucks in 2 months. You guys are gonna get canceled real quick. Some insurance companies do allow it, not very many. You're talking like single-digit percentage insurance companies allow it. And if that's the case, then you gotta have a really good plan. You have to find an underwriter to talk to them about it, and have a good story for it. So don't go just thinking, man, let's grow this baby. Amazon wants me to grow, so be careful and make sure your insurance company is comfortable with it. Otherwise, you will get canceled, your rates will get jacked up. It's not gonna be a fun time. So thanks for watching, guys. Please like, subscribe. If you guys got any questions on anything here, let me know. I'm happy to help. Big shout out to 10-4 Truck Insurance. Got their shirt on. Went to visit them here 2 days ago. So, thanks for watching.